Coinbase CEO Brian Armstrong deletes cryptocurrency posts amid SEC pressure. Access the link in the description to stay updated on all cryptocurrency and Bitcoin news, as well as real-time charts. On Monday, July 10, 2023, Andrew Bailey, the Governor of the Bank of England, BOE, addressed the challenges and opportunities brought about by digitalization in the realm of money and payments. Bailey expressed his concerns about high inflation levels in the United Kingdom, stating that inflation was unacceptably high. He argued that general inflation would significantly decrease for the remainder of the year, as some temporary factors causing inflation to rise subside. Furthermore, Bailey discussed the impact of digitalization on money and payments, and in this context, the role of the central bank. He mentioned that the BOE is researching the potential benefits and risks of issuing a central bank digital currency, CBDC, which would be a digital currency issued by the central bank and usable by households and businesses. Despite the existence of digital currencies, Bailey emphasized that cash would continue to have a presence, and the BOE's work on CBDC does not alter its commitment to physical cash. Cryptocurrencies like Bitcoin are not money but speculative assets. Bailey also provided comments on existing digital currencies such as Bitcoin and stablecoins. He stated that cryptocurrencies like Bitcoin are perceived more as highly speculative assets rather than actual forms of money. Additionally, he mentioned that stablecoins are not resilient and fail to meet the standards of a secure currency. 3 senior officials from the Federal Reserve, Fed, delivered speeches today, providing important clues about the upcoming interest rate decisions and the tightening cycle, while expressing different views on the speed and extent of the tightening measures. Michelle Barr, Fed member, Michelle Barr stated that the Fed will monitor regulatory and supervisory changes in the coming months, including higher capital requirements for the largest banks. She mentioned that the new rules would mean that the largest banks would need an extra $2 in capital for every $100 of risk-weighted assets, and the heightened capital standards would be extended to banks with $100 billion in assets, expanding from the previous threshold of $700 billion. Barr also acknowledged that inflation is running high and the recent movements in interest rates are part of a careful progression process. She stated that the Fed is nearing its maximum employment and price stability goals but still has some work to do. She added that interest rates are getting close to being restrictive, but the Fed still has work to do. Loretta Mester, Cleveland Fed President. Loretta Mester highlighted that raising interest rates would reduce the risk of needing more aggressive steps in the future. She emphasized that the Fed's policy is less restrictive compared to the past, and the institution will need to tighten a bit more to bring down inflation. Mester mentioned that the Fed's rate hikes have moderated economic activity and reduced recession concerns among business leaders. She also stated that the Fed is closer to the endpoint of the tightening process compared to the beginning. Mary Daly, San Francisco Fed President. Mary Daly emphasized the high level of inflation and the need for the Fed to continue raising interest rates. She noted that the Fed may require several more rate hikes this year, but highlighted the importance of being data-dependent in policymaking. Daly stated that it is appropriate to slow down the pace of interest rate hikes, and that the risk of doing too little on rates outweighs the risk of doing too much. Additionally, Daly mentioned that the Fed could make fewer or more rate hikes this year based on the data. She added that one lesson learned from the previous cycle is that the Fed can raise rates even while its balance sheet continues to expand. PancakeSwap has announced a partnership with Google Cloud, which has caught the attention of investors in the cryptocurrency markets. Following the announcement, the price of the Cake token has surged by over 10%. In a recent announcement, Google Cloud revealed that PancakeSwap has integrated its services into the platform. PancakeSwap, which uses Google Cloud to balance high traffic and scale its platform, stated that they have initiated the integration of cloud solutions to support their needs. Previously, Flare, FLR, Near, Polygon, Matic, and Celo had also made similar partnership announcements. Following the PancakeSwap announcement, the price of Cake experienced a rapid increase. After trading at around $1.44 during the day, the price of Cake reached levels of $1.52 following the announcement. As of the time of writing, Cake is trading at around $1.50. Increasing inflows into cryptocurrencies. $470 million digital asset investment products saw an influx of $136 million last week, marking the third consecutive week of inflows and bringing the total inflows to $470 million. This completely offsets the 9 weeks of outflows and results in a net positive flow of $231 million since the beginning of the year. James Butterfill, the chief investment strategist at crypto investment firm CoinShares, discussed the recent increase in inflows to cryptocurrencies in a blog post today. According to Butterfill, Digital asset investment products received $136 million in inflows last week, bringing the 3-week consecutive inflows to a total of $470 million. This completely offsets the previous 9 weeks of outflows and results in a net positive flow of $231 million since the beginning of the year. However, Butterfield noted that trading volumes have slowed down, reaching a weekly total of $1 billion compared to the average of $2.5 billion in the previous 2 weeks. These lower volumes could be attributed to seasonal effects, as July and August generally see lower trading volumes. Bitcoin dominates demand. Bitcoin continued to attract investors' interest with a total inflow of $133 million last week, while short positions saw $1.8 million in consecutive weekly sales for 11 weeks. This indicates that investors are currently more interested in Bitcoin than altcoins. On the other hand, Ethereum saw a total inflow of $2.9 million last week. The 3-week inflows represented only 0.2% of the total assets under management, AUM, compared to 1.9% for Bitcoin. However, Butterfield mentioned that Ethereum has remained in a negative net flow position of $63 million since the beginning of 2023. Additionally, there were small outflows in short positions for ETH, amounting to $0.3 million. In terms of specific altcoins, inflows were observed in Solana, XRP, Polygon, Litecoin, and Aave, while there were slight outflows in Cosmos and Cardano. Lastly, James Butterfield highlighted that blockchain equities witnessed the largest inflow in the past year, totaling $15 million. Coinbase CEO deletes Bitcoin and altcoin posts. Why is he deleting them? Here are those posts as the SEC pressure on cryptocurrency exchanges continues. An interesting move has come from the CEO of the largest US exchange. Brian Armstrong, the CEO of Coinbase, who has made numerous bold posts about cryptocurrencies on social media, has started deleting his old posts. According to the observations of the user Predator, Armstrong's posts have also been removed from archive sites. Therefore, all the posts deleted by the famous CEO are no longer accessible. No statement has been made yet regarding the deleted posts by Brian Armstrong. According to Predator's findings, some of the deleted posts are as follows. Armstrong defends increasing the Bitcoin block size and announces Coinbase support for the controversial Bitcoin XT. He believes that the price increase in Bitcoin is also related to the block size. Armstrong retweets a post about Bitcoin Cash surpassing Ethereum's market value. Armstrong expresses that altcoins exist to distract attention and that it is necessary to focus on Bitcoin and its sidechains. Coinbase employee Charlie Lee asks Armstrong to list his created cryptocurrency Litecoin, and Armstrong responds with, "Okay, let's do it." A day before Charlie Lee announces selling all his LTC, at its 2017 peak, Armstrong shares a post titled, "Employee Trading Policy." After Coinbase lists Ethereum, the price increases by 4%, and Armstrong posts a rocket and moon emojis. Armstrong claims that USDT is not fully backed. While Brian Armstrong's deletion of cryptocurrency-related posts caused momentary panic, it is considered that this move might be related to advice from lawyers. In the SEC's lawsuit against Coinbase, the agency alleges that the exchange violated securities laws. In this regard, it is speculated that this precaution was taken to prevent Armstrong's old posts from being used against Coinbase in the lawsuit. In the lawsuit, the SEC claims that Coinbase illegally facilitated the trading of cryptocurrency securities, earning billions of dollars. Access the link in the description to stay updated on all cryptocurrency and Bitcoin news, as well as real-time charts.